And we demonstrated in Q2 that we are not burning cash. Actually, we are cash flow positive. The second important point on the earnings that I wanted to address are the fact that we got a lot of warrants expired and warrants exercised. Over 5 million warrants expired and got exercised.
Hello, you're watching Proactive. I'm joined by Michel Amar. He's the CEO and founder of Digi Power X. Michel, very good to speak with you again. Colocation revenue jumped 163% year over year in the 6 months ended June. What's driving this surge, and how sustainable is that growth in the AI infrastructure market?
So, good morning to you guys. Our business model is to lower our risks by creating these colocation business ventures, so we don't have to capex the miners, and therefore get a share of the profit and improve our margins. Actually, if you look at our result of Q2, we actually had the adjusted EBITDA that was positive with low revenues, but we had a $200,000, which was a big improvement from the first quarter, and we forecast that trend to keep on going for the rest of the year. Let me address the Q2 earnings that we released last Friday or last Thursday night. If you noticed, we got our stock got really hammered, and I'm not sure, and I don't understand why, because our position has never been so good or better. Today, we sit on $30 million cash on our balance sheet. We have no debts. Year to date, we capexed over $6 million, meaning we made that money and we invested $6 million in order to start the setup of our pivoting Alabama site to AI. Our revenues were lower because we stopped mining in Alabama because we are pivoting, we're in transition. So for a company that transitioned a site to AI and still managed to be positive EBITDA, adjusted EBITDA, I think was a great performance. Last year, compared to last year, where we had very low cash and ongoing concerns in terms of cash, the ongoing concern risk got removed by our auditors. So we are no more an ongoing concern company because of our cash position. Still no debts. Our G&A is one of the lowest in the industry. We are below $6 million a year in SG&A. In other words, our cash position allows us to pay for our bills for the next 5 years. And we demonstrated in Q2 that we are not burning cash. Actually, we are cash flow positive. The second important point on the earnings that I wanted to address are the fact that we got a lot of warrants expired and warrants exercised. Over 5 million warrants expired and got exercised, which takes the company in a much better position as well. Additional point, our last raise with a long-term investor was done with no warrants. It's one of the first raises we've done where the investor believed to be long and not get warrants as coverage. And I think that's a very important factor for the company because they see a great future for the company. So going forward, we have our pivoting in Alabama. we will get our incredible new ARMS 200 system, the AI-ready modular solution that we created with Supermicro. It's a flexible AI modular system, certified Tier 3, that we're gonna set up in Alabama per 1 megawatt at the time, which is the building blocks of 1 megawatt. And Alabama will give us, in critical AI megawatt, about 42. We have 55 megawatt there. Critical operating megawatt will be about 42. So it will be like 42 blocks or ARMS 200 systems. So we are very excited as we plan to start to operate end of the year towards Q1 2026 and add brand new stream of revenues predictable for 2026 and on. And that will change the company profile, and the revenues will grow, the EBITDA will grow. 2026 is really our pivoting and turning point for the company.
Well, Michel, I hope you'll continue to keep us updated with your progress. Thank you very much for your time today.